All right, YouTube. We're here to talk about divergences and convergences here on the 49 Trades channel. And specifically, we're looking at divergences and convergences on the stock market. And when we're talking about divergences, we're looking at basically two things on a graph: price and a pattern or a indicator, or something, not necessarily a pattern, an indicator like the MACD indicator and the RSI indicator. Probably the two, one of the two most mainstream indicators you got out there. And honestly, probably my two favorite. RSI is definitely my longtime favorite, but two great indicators. And when when they're converging, the price would be going down, right? You got your lows here, your highs here, and they're going lower, right? But on your MACD, your lows and your highs are going up. Same with your RSI, lows, highs. Sometimes you'll get lows here, but they might not corroborate with the RSI. I would focus more on the MACD, but see what the RSI can tell you. Anyway, so these ones are converging because they're coming together, and it's bullish, right? But then this one is bearish, and they're diverging, going away. And it's the same thing. Lows are going up, and the highs are going down. Doesn't matter. They're both, whatever. Same thing here, but it's the opposite. So remember, these ones, they're coming together, and it's bullish. This side, they're going away, and it's bullish. That's why it's always handy to just have the chart. I like having the chart handy. I had it drawn out for a little bit, but it's easiest just to have the chart handy or print it out, even if you've got it open on a tab somewhere or something. I just like to have it. Anyways, moving on, I want to explain a little bit about the MACD. MACD simply is just a moving average convergence divergence, and it's a momentum oscillator. An oscillator is just an indicator that's supposed to oscillate around a specific zone. Like with the MACD, for example, it's typically zero. It is zero because the 12 EMA, or the exponential moving average, is getting subtracted by the 24 EMA, right? So you got 12 minus 24, and that's just telling you that in the last 12 days you got a positive number, or you got more positive numbers than, not more positive numbers, it's more positive than the last 24. You would have above zero number. But if your last 12 days have been more negative than the last 24 days, you would be below zero, be a negative number. And that would be your MACD line, right? And then your signal line is literally just a 9 EMA of the MACD. So this will be plotted out after you can get 24 periods, right? Because that's the minimum. You need 24. After you get 24 periods graphed, and you got your 12 EMA as well, you can start getting 9 of those, right? Well, that would be your first one. So after 9 days after the 24, so 33 days, you'd be getting, or 33 periods, you'd be getting, you have enough to get that 9 EMA of the MACD line. So that's interesting. But so that forms your signal line, right? The 9 EMA of the little math problem we did, that becomes your signal. So that's your typical, right? If you're getting an average of the averages, and then if your moving average, your MACD line crosses your average of those averages, then that could be a trigger. And then also most every graph, I think, I've never seen a graph not include it, but anyways, include a histogram with positive or negative volume. And that's just how the MACD, how I was saying, it kind of revolves around zero. Same with this positive or negative. It works out perfect, where if you have a positive day, right, or positive, even minutes or whatever graph you're looking at, positive time, positive periods would have a above, a positive volume above that zero mark on the histogram. But if it was below zero or a negative day, it would be down here. So that's pretty straightforward. And in application, the MACD, if the MACD line, right, crosses below, the MACD line crosses below this line, it's bearish. Crosses above this line, you would be bullish. Pretty, I mean, not always, but that is the standard, right? In that moment, it would be bullish or bearish, but it's not necessarily an indicator for what the market is going to continually do. That's why people will say look at the MACD, but don't use it all on its own. And then I used to just look at the MACD and the RSI before I started figuring out this divergences stuff. I was using just those, and RSI is just to measure if a security is overbought or oversold, and it's a number between 0 and 100, but it's kind of in a way like a percentile, right? Because you never see a number at 100 and you never see a number at 0, but they're typically overbought at 70 and oversold at 30. And I would even push those numbers a little bit down. Like this would be 60 and this would be 40, a little closer to the middle, right? Because it's like a bell curve. You're never going to reach the ends of the bell curve, but at the 70-30 mark, you know that chances are it's probably going to want to push back. It's going to want to come back to that 50. And RSI is affected directly by price change as well, but it's affected in a different way, where it's affected by the loss and the gain. And see how in this, we got step 1, and then however this worked out, it should just say step 2 right here. But this is step 2 of the problem. And I think this is because you need 14 days, right? 14 days is the like how on the other one you needed at least 24 days for the 12 and 24, and then you needed the 33 days to get that 9-day moving average of the MACD line. On this one, you need 14 days, and I think you need an additional 14 days. I think you need 28 days. I think that's what this is trying to show you, is that this is your average gain or loss at this period. So this would be, substituting, the previous, right? And then this is the current, and then that would get you your number. And it's 100, 100, right? And then your 14 is for your 14 days, and that the 100, 100 would be your max number of 100. So it's 0 to 100, and you're never going to be 0 because there's always positive numbers. But so moving along. Just back to the graph. Now that we know what those things mean, the RSI, the price could be like, for example here, we had, let's say this graph was moving, and it's been going up and going up and going up. You would have had RSI numbers all across the board through here, at all times. You can even see it here, but these are stocks are going up. With the RSI index, they could be oversold or overbought and do all kinds of things, I guess is the point I'm trying to make. But if you start combining indicators and you start combining, these types of divergences, I think this is really starting to get onto something. So moving right along, we're going to try and shoot over here to a graph and show you an example now. I'm looking at ticker name AROC right now. I just honestly just typed her in, and I scrolled back a little bit because I didn't want to show you guys, the exact current dates. I'm not, an expert on all this, and I really don't want, any of you guys to think that I'm telling you exactly what to buy, when to buy it, or whatever. I'm just trying to, educate a little bit, talk about some stuff, strategize, and then here's the example. Anyways, just getting right into it. I get into this example. I want to show you that sometimes, it's not always, 100%, but either way, there's something all of us can learn from this. And right in here, so see how we had, a long kind of like stagnation period right through in here, right? And then we kind of hit a low. And so right here in this low on the histogram down here on the MACD indicator, you can see that it's a long period, right? For me, that seems like a long period of, green on the histogram. And then just for that little red blip it, to me, that means that there is strong buying power, because look at that, all that time, and it's still, that histogram's still only about the same size as it was right here back in at this time. And I'm looking at a 4-hour chart, so two of these is, give or take a day, a little more, I think, but either way, that's, that tells you something. And then you get two big buy off days, right? And still nothing on the red, nothing there, and still a little bit on the green. It's still wanted to climb. So what I wanted to just kind of bring to everybody's attention is, so see how large this is. I'm gonna take the RSI off just for a minute now, and let's see if we can just hide this. Yeah. No, that was obviously the wrong one. Yeah, there you go. And so right here we have real tall, a lot of volume, right? Kind of an abnormal amount of volume looking in the past here. It's not really normal. It's almost double normal, right? And, that's about half what those histograms are, about what the level is over there. And so that is an increased amount, significant increase in buying pressure, and nothing to corroborate with selling pressure down here, right? So it tells you that, those guys jumped in there, bought, and they're holding. And they're holding. And then, so here was a sell-off, right? But it wasn't really that bad on the price. You can kind of see that. And then, bang, there's a buy-off again. And sure enough, that buy-off is tied with this one. But since it's tied, and I don't know what was going on at the time with this company, if they were having some news or something, but either way, you can see with this buy-off, it was about the same, right, as this one on the volume. And then when you go from this one, this high, down to this high, you drop off. And see that? It's not able to hold that. So, pretty much right there, she sells off and drops down. But see how it drops down? So you had that, price was going up, but then, they diverted the indication between the indication and the price. There was a divergent. And so then crossing down, we cross into a low, right? And we get, a significant amount of buying or selling pressure, and it's tied. And so it's the same kind of thing. It's not growing, so it's not necessarily a divergent or, convergent, but since it's staying the same, it still can tell you something. That, man, so there's a lot of buying pressure, big sell pressure, and it's, it's not getting any worse. You know what I mean? It's not, like, what that kind of could tell you is that the buyers here that came in, some of them sold off here, but it's not, you're not seeing that double whammy. To me, I'm not. And then you're seeing more buying pressure here. But the point I was trying to make is, so it's even here, and that's kind of, maybe some more buyers jumped in right in here in this zone to test it out again. But you can kind of tell this is, it's losing its momentum. And then right in here, this is the real thing I wanted to bring everybody's attention to. So it drops off, picks up again, drops off. And and it's just clear as day that, this is, this indication, the indicator is working here. It's just not as a deliberate of a case as you might see everywhere. But I thought this was a good example to bring everybody's attention, because it still does tell you information. And I wanted, just to share my little bit on that.